You know the feeling, right? One headline screams Bitcoin is collapsing, the next predicts new all-time highs. You buy, it dumps. You sell, it pumps. It feels like you're constantly one step behind, getting absolutely wrecked while a few insiders seem to know exactly what's coming. Well, that confusion, that feeling of being played, it ends today. Here at Whale Radar, we're going to cut through all that noise and give you the exact framework the smartest money is using to get ready for 2026. I mean, just look at this mess. One analyst is calling for $178,000 Bitcoin. The next is warning about a massive crash down to 72K. So who are you supposed to believe? This right here is the #1 thing messing with every investor's head. But what if I told you both of these headlines are just distractions? What if there's a much bigger, almost invisible force that's really pulling the strings on this entire market? And that's exactly where we come in. Welcome to Whale Radar. Look, my job isn't to sell you hype or fear. It's to find the signal in a sea of absolute noise. We track what the big money is doing, from the global macro picture all the way down to those tiny projects with massive potential. So you can actually make smart decisions instead of just gambling. Okay, let's get into it. All right, first up, the new rules. Macro and money. And we have to start here because honestly, the game has completely changed. If you're still trying to use the playbook from 2017 or 2021, you're not just going to get left behind. You're basically playing the wrong sport. A huge shift is happening, and it all comes down to one thing: the flow of global cash. So you've got this battle of two huge ideas right now. The old playbook, the one you hear about all the time, is the Bitcoin halving. You know, the idea that because Bitcoin's code cuts the new supply in half every 4 years, a bull market just magically happens. But the new reality, what the big institutions are actually betting on, is the global liquidity theory. And this theory says, forget about Bitcoin supply for a second. What really matters is the supply of money in the entire global system. It's no longer just a crypto story, it's a world finance story now. And this quote from macro guru Raoul Pal just nails it. Liquidity drives this market, not the 4-year halving myth. This should completely interrupt how you think about crypto cycles. What he's saying is Bitcoin has grown up. It's not some niche asset anymore. It's basically become a proxy for global money. So think of it like this. When the ocean of global capital rises, Bitcoin is the fastest boat on the water, and it rises the highest. But when that tide goes out, it sinks just as fast. So the real question isn't, when's the halving? The real question is, when is the tide of money coming back in? And that brings us to the actual catalysts for 2026. This isn't guesswork, these are things already in motion. First up, the Fed is set to stop quantitative tightening, which is just their fancy way of saying sucking money out of the economy, and they're expected to start cutting interest rates. That 1-2 punch is like flipping the switch on the global money printer. Then you have the spot ETFs. This is a brand new permanent pipeline for trillions of dollars from Wall Street that couldn't even touch crypto before. We're just getting started with that. On top of that, the global money supply itself is projected to expand, and all that new cash has to go somewhere. So the bottom line is, this isn't about hoping for a bull market. It's about seeing where the money is already set to flow. But look, all that cash is just the rocket fuel. It needs a rocket to attach to, a huge narrative to really light the fuse for a supercycle. And that's where the other half of this story comes in. There's a tech wave building right now that could be even bigger than the dot-com boom, and it's happening right on the blockchain. We're talking about the tokenization supercycle. Now, if you're new to this, the idea is actually pretty simple, but it is ridiculously powerful. It's about taking real-world stuff, like a piece of a skyscraper, a government bond, even a share in a hot startup before it goes public, and turning it into a digital token on a blockchain. This does two incredible things. It unlocks assets that have been impossible to trade easily for ever. You could literally own $100 worth of a Picasso painting. And it rewires finance to run 24/7 with instant transactions. We are not talking billions here. This is a multi-trillion-dollar opportunity to rebuild the financial system from the ground up. And listen, this isn't just some crypto fantasy. Wall Street is all in on this. The massive asset manager Bernstein laid out this exact roadmap. They're actually predicting a market correction in late 2025, which is a good thing, by the way. It washes out all the gamblers. But then, they say in 2026, this tokenization supercycle really takes off. And that's what drives the new bull run, with their first target for Bitcoin at $150,000. And that's not some random influencer's guess. That's the institutional plan. They see a peak of $200,000 in 2027, driven by this tech actually being used in the real world. But there's a second engine firing up at the same time, and it might be just as powerful. the convergence of crypto and AI. This isn't science fiction anymore. We're seeing projects right now building AI agents that live on the blockchain. They can automate trades faster than any human, and they can even audit code to find hacks before they happen. The easiest way to think about it is we're giving the blockchain a brain. And this combination is creating brand new tools that people will use because they're useful, not just because they want to speculate. That's how you build real lasting value.
So we've got the fuel from the global economy, and we've got the twin tech engines of tokenization and AI. Sure, Bitcoin and Ethereum are going to soak up a lot of that value, no doubt. But once those giants start to level off, the whales, the really smart money, they do something very specific. They start moving their profits into riskier bets, hunting for the projects that can deliver not just a 2 or 3x, but a life-changing 100x. This is the alpha hunt.
Now, this is the part of the cycle where, yes, fortunes can be made, but let's be totally clear. This is also where the risk is off the charts. We're talking about the pre-sale market, getting into projects before they're even on an exchange. This is a peek inside the high-risk, high-reward world, and it takes a totally different kind of research. You can't just look at a price chart, because one doesn't exist yet. Okay, so based on the material, a couple of these early-stage projects are popping up. One is BlockchainFX, ticker BFX. They're trying to build a fully licensed, all-in-one app where you can trade crypto, stocks, and Forex. The goal is to basically be the Robin Hood of the blockchain world. Then there's a project like DeepSnitch AI, or DSNT, which plugs right into that AI narrative we were just talking about. Their whole idea is to give regular traders the same tools the insiders use, using AI to track whale wallets and automatically check for security risks in new projects, trying to solve that huge fear of getting rugged.
And this chart really puts it all into perspective. Over on the left, you've got Bitcoin. A target of 150K is an amazing return, but it's about a 2x from recent highs. In the middle, you've got something like Solana, with targets from 350 to 570. Again, great potential. But then, way over on the right, you have the presale alpha. A project like DeepSnitch AI has models projecting a path to a 250x return. Now, is that insanely risky? You bet it is. Most of these projects will fail. But understanding this spectrum is how you build a smart portfolio for a bull run. You anchor yourself in the safer stuff, and you take small, calculated shots on these moonshot plays.
Trying to navigate this whole thing from what the Fed is doing all the way down to these crazy pre-sale projects is incredibly hard. You are getting bombarded 24/7 with bad information, with paid promoters, with straight-up scams. This is where getting real, unbiased insights becomes your single most valuable weapon. It's the difference between catching a massive wave early and just becoming the exit plan for someone else. So if you really want to be ready for 2026, I have 2 simple steps for you. First, subscribe to this channel, Whale Radar, for all our big picture analysis. Second, and this is the most important part, click the link in the description and join our free Telegram channel. And let me be really clear why. What you see here is just the beginning. In the Telegram, I'm sharing my personal trade setups and analysis that's just too fast-moving for YouTube. And more than that, I'm in there every single day, personally answering questions and helping our community through this market. It's not just another crypto group, it's our command center for the 2026 cycle. Okay, let's bring it all home. Let's put all these puzzle pieces together into one clear thesis for what the 2026 supercycle is truly all about. What we're looking at here is a perfect storm. The main engine is not the halving. It's the massive wave of global liquidity. The tech that's pushing it forward are the twin engines of tokenizing real-world assets and merging AI with the blockchain. The structural change is that Wall Street now has a permanent, regulated highlight into crypto through the ETFs. And for those with the stomach for it, the high-risk frontier is where the smart money is going to be hunting for those massive returns. Any one of these things would be big, but all of them happening together, this could truly be the biggest cycle we have ever seen. But that leaves us with one last crucial question. If the old playbook, the 4-year cycles, the halving narrative, if it's all obsolete, what does that mean for the risks? A new game means new rules and new ways to win, but it also means new hidden traps. How does a market driven by liquidity crash? What happens when Wall Street brings its automated trading bots and complex derivatives into our world? Understanding those new dangers is every bit as important as seeing the upside. And that is exactly what we're going to break down next time. Trust me, you are not going to want to miss it.